Hello, I'm Troy Bocklemann with the CattleFax Closing Bell. Today's CattleFax Closing Bell is brought to you by Zoetis. Give your calves a healthy start against respiratory disease. Protect your calves more completely with concurrent use of Enforce 3 and One-Shot BVD. Together, they stimulate a rapid immune response against respiratory infections caused by IBR, BRSV, BI3, BVD types 1 and 2 viruses, and Mannheimia hemolytica. Learn more at CompleteCalfProtection.com. In the spring, when planting and the early stages of the production cycle occur, markets tend to trade the supply side of the equation. In the most recent USDA crop progress data, corn planting was at 96% complete compared to 98% in 2016. Corn emergence was at 86% compared to 90% a year ago. Well below year-ago levels, planting and emergence was above or at the 5-year average. Once the planting is done, market participants will look to yield to estimate market conditions. USDA estimates that corn yield would be at 170.7 bushels an acre, right at the historical uptrend and down 3.9 bushels an acre from a year ago. With this yield and 90 million planted acres, supplies will be adequate to keep stocks to use in the 13 to 15% range. With planting progress in the range of the 5-year average, yield expectations will be determined by weather. The current weather forecast implies favorable conditions for the major crop regions, and unless this changes, there should be adequate corn supplies for the coming year. June can be a volatile month in corn futures, as the market determines the conditions of the new crop. Looking forward, there are risks to the market. First would be weather. While the forecasts are favorable, it will be important to watch the weather conditions to determine the crop yield potential. There is also a near-record large non-commercial short position in the corn futures market. If those market participants perceive there is a fundamental reason, such as weather adversely affecting yield, a quick reduction in this position could cause a spike to the corn futures market as they liquidate. The question would then be, does the perception turn to reality? If not, then prices would then move lower again. The current forecast calls for stocks-to-use levels to be in a comfortable position for the 2017 and 18 crop year. It'll be important that producers look to their own corn needs and risk management practices to determine an effective way to manage the risk to this market. Keeping in mind that market participants will generally focus on the supply side of the market until the crop yield and production is determined before focusing on demand. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.